Hi Muhammad, thanks for joining. Hey Zina. Hey Hussam. Hey Dee. Hey Hamza. Salam. Hey Sulfar. Just give it another minute. Hey Xavier. All right, I think we can begin. Thanks everyone for joining. It's a weird day to wake up to, or if you're about to sleep, like some of you that I know are in North America. I know it's not a good place on the news right now, and I even doubted if we're gonna have this session. But I realized it's even more important actually to have this type of content, and we all need a bit of reassurance in a unique event that we're experiencing today. So my name is Mark. I'm the co-founder and CEO of Sarwa, and we run these Ask Me Anythings as a chance for you to ask anything that's on your mind, whether it's about investing or Sarwa related, the markets. So we're going to be discussing that for the next 20 minutes or so. And the only favor I have to ask you is to gather up your courage to really ask what's on your mind, so that you can benefit from it, and other people are probably wondering the same thing or have the same question on their mind. So thank you everyone for joining. As a bit of background, Sarwa, on what we do, we're basically the leading investment platform here in the UAE and serving the GCC in general. We have more than 60,000 users. We're backed by Mubadala, and we're on a mission to basically help everyone invest in their better future by providing transparent, better investing. But in parallel to that, we want to educate everyone on the importance of investing and some healthy financial habits. So I'll get started, and please type your questions as we go so that I'll do my best to answer them. The first one I want to start with is, all right, what's happening with the news? The market hasn't been performing as well. Now there's the Ukraine-Russia situation. What am I supposed to do as an investor? How should I behave? Should I change anything? The short answer is you should, and exactly. So the questions are coming in around the topic. Thank you, Amraros. Basically asking, are we going to see a market crash because of Russia? What's going to happen? So there's a few points I want to tell you, but I think sometimes a picture is worth, there's something along the saying of picture is worth more than words. So I'm going to share an image here. Let me see. Sorry, let me get used to this. There we go. So if you can see my screen, I'm showing you a graph basically of the stock market performance since 1930s, and this is all the way to 2015. And here I want to show you how the market has reacted to disasters. This is the World War II that we're witnessing here, and already people are talking about World War III or another event. But the point I want to start with before moving on is, how does the stock market react to the Great Depression, the World War II, the Korean War, the Vietnam War, Russia launching Sputnik, the US economic recession, the Gulf War, and you can see all the way up to 15,000% of a cumulative return, and that's only 2015. If we continue, these numbers are much higher. So for the first thing is that the market lives in uncertain time. It rewards you for taking risk. And these are the moments that are going to make you and make your return. So it's really, really important for you, for the people around you, to really gather your emotions. And this is the moment where you should hold. You shouldn't panic. In fact, some people are taking this as a buying opportunity for you to invest systematically every month, whatever is happening, so that you end up stronger and you benefit from being strong. So this is the first message I want to tell you. If you're wondering what's going to happen, anyone telling you that a lot of theories are at the moment, so you shouldn't really be too tied to one event. Of course, it's a tragedy. I cannot still believe that this is happening in 2022. But I'm not concerned about the market. That's what I can tell you. The market behaves in certain ways. The market reacts to certain events and rebounds. But for you as a retail investor, it's really important for you to take control of your emotions and avoid panicking, avoid selling, because you only lose money when you sell. Otherwise, the best course of action is to stay the course and you'll come out stronger. So this is hopefully this answers the question around the market volatility at the moment. And in fact, just as a metric to give you, I asked on LinkedIn 2 days ago, how are you feeling right now? And I gave 3 options. Do you want to buy the dip? Should you hold and do nothing? Or do you need reassurance? And 98% of people said that they would either hold or buy the dip. So this is the type of community that we're building here. And if you already subscribe to this thinking, then it's important for you to inform others around the importance of staying the course and thinking long term. Because every time we show all of these graphs of things progressing over the long term, it involves you staying the course and thinking long term. Hopefully that was clear around volatility. And if you have additional questions on that, let's please dive into it. I've prepared quite a few charts if we need to, but I'll avoid boring you with data if you're already cool and on top of it. So moving on to additional questions that are coming in. We're asking about if you're considering DFM, ADX, so local stocks, if we're adding them to Sarwa, and Irish domiciled ETFs. So at the moment, we're focused on the US stocks. In the future, yes, we will be expanding our product suite to add additional stock markets, additional currencies, cryptocurrencies, for example. So the goal of Sarwa is to become a one-stop shop for all of your financial needs. In the meantime, however, you can still get exposure to emerging markets by buying emerging market ETFs on the US stock market. So I'll give you one example. We use one ETF called IEMG in our Sarwa Invest portfolio. And IEMG gives you exposure to the region as well, with countries like Saudi Arabia or the UAE, by having a portion dedicated to emerging markets. So especially in turbulent times like this, where there's a lot of uncertainty, it becomes even more important to become diversified. So the way we approach it at Sarwa is we don't just put all your money in large companies or small companies or bonds and stocks. We spread it basically across the whole globe. So you have exposure into US stocks, European stocks, emerging markets, a bit of bond exposure, and a bit of real estate as well, so that it can protect you during these volatile times. So if you're wondering, is my Sarwa portfolio built for times of volatility and uncertain times, then the answer is yes. We already thought through during the portfolio construction for you to perform well at all times. The only expectation from your end is to keep steady, hold, or keep adding funds as these events unfold. So that was a 3-in-1 answer, Abdurrahman, Nar, and Mar. Thank you for the great questions. All right. Cool. Well, we're gonna use this time while you think of your next question. I wanted to show you another chart that's really important for you to know, because again, while historical performance doesn't dictate the future, history sure does rhyme. So it can inspire us on some of the things we can expect. I spoke too quickly. So a question from Rami: if we'll be able to invest in other markets in the future, like the KSA market, for example. Rami, I just covered that briefly by mentioning that you can get exposure to emerging markets such as KSA through some ETFs or exchange traded funds that allow you that hold some of the top companies listed on the KSA market. So if you go on Sarwa Trade and search for IEMG, for example, this is one of the ETFs that allows you to do that. I'm gonna shift gears here to show you another data point on how the no worries, Rami, on how the stock market performed during our most recent biggest crash that we lived other than COVID. But basically, this is the value of $1,000 invested on October 9th, 2007. So the pre-crisis peak all the way to 2019. So you see here the value of $1,000. If you stayed in cash, then you would have actually lost money given inflation. And especially today, the value of inflation and the price of rising is even higher. But even if you invested at the worst possible time and didn't add a penny more, well, 10 years later, you would have doubled that to $2,000. This is assuming a 60% stock, 40% bond portfolio. So again, so many lessons around over the long term, the market recovering and you benefiting from staying the course. And this is one of my favorite charts. I know it's a bit dense, but I'll try to simplify it for you. So this is a study conducted between 1970 to 2017. And it analyzed basically what is the stock market return during bear markets and what type of behavior, what are the investors that did that got the most amount of return during these times. So we have 4 types of investors, and I hope that you will you'll be this one. Basically, if you stay invested, fully invested through a bear market, so a market that is basically witnessing a 30% or more in terms of a crash. If you stay invested throughout, you don't do anything, 3 years later, you would be at an 83% return. But if you miss out on 1 month, so if you think, you know what, I'm gonna wait 1 month, the time Russia and the whole world figure their situation out and get back in 1 month later. Well, notice that 3 years later, and that's only 1 month, your return goes from 83% down to 57%. So that's a massive that's a massive drop only from staying out of the market for 1 month. Imagine you stay out of the market for 3 months, well then your return goes from 83 to 50. And then if you stay out of the market for 6 months, or you're like, you know what, I'm just gonna wait it out to after the summer, well then, same thing here. Your return is slashed by half to 42%. So this is just one example. There's so many of these examples, but the message is clear again and again. It's to hang tight and stay the course so that you can benefit from the market once things clear up. But we really don't know when it's going to clear up. Sometimes it takes 3 months, like it took in 2020. Sometimes it could take a few weeks. The market isn't very rational, so really don't try to time the market and stay steady. If you need to listen to the news less, do that. Do whatever it needs so that you don't feel like you need to panic sell. I think I got a question from Hamza, great one. During non-clear market trend, would you suggest DCA or a lump sum? Very good question. So DCA, for those that aren't familiar with the acronym, is dollar cost averaging. So if I have basically $60,000, do I invest $10,000 across the next 6 months, or do I invest it as a lump sum? Immediately on February 24, do I put the $60,000 today? What the research shows you, Hamza, is that investing in a lump sum, so $60,000 immediately, pays off over the long term. It has a higher chance of winning as a strategy. I can tell you that with my own situation, I invested a lump sum in January, and of course now I'm seeing my portfolio go down. But I trust that even if I'm seeing my portfolio go down, I'm a seasoned investor. I've been investing for a very long time. So for me, I don't find like I'm going to change my portfolio allocation. So I want to put all the odds in my favor. But Hamza, if you feel like you're going to experience regret, that if you're going to invest and you don't like seeing your money at $58,000 or $55,000, whatever the amount is, well then dollar cost averaging is a really good way so that you avoid procrastination. It avoids you having to say, am I going to invest today, tomorrow, next week? And instead of having this decision making that's going to tire you of when should I invest, dollar cost average allows you to get started today and to work up to your risk profile. So all it really does is that it delays your risk for a future point in time. It could be 3 months or 6 months. If you're investing with us, we rolled out this feature actually yesterday, where you can reach out to our team and we can help you set up a schedule so that you don't feel like it's this big decision that is waiting on you to take in an unclear environment. Great. I think a few more questions came in. So, Syed, you're also asking if there's a possibility to reduce the process time to 24 hours after the deposit. Yes, there is that possibility. That's something we're working on improving. Currently, it takes sometimes it's same day, if depending on the bank you're working with. But one of the things you can expect from us this year is to allow you to have instant funding so that you can fund and invest immediately. But if you don't want to wait the time your money reaches our brokerage account, well, again, you can take advantage of our dollar cost averaging method, where you can park a lump sum with us, and we can invest it gradually over the next few months. I know a lot of us want to benefit sometimes from the market being stock prices being cheaper, and we want cash to be available in the brokerage account so that it's deployed immediately. So if that's your situation, Syed, I would recommend that you send a lump sum. Instead of storing it with your bank, you can leave it with us and we can put it to work across a few months. Great. Going to show you, do we have some time for another chart to maybe show you while we're waiting on the set of questions? Yeah, 1 second. So this is another study that I really like, done by Charles Schwab between 1996 to 2015. So again, a long duration of 20 years, an analysis of the stock market. So this study fascinates me because it can show you how unforgiving the stock market could be. So losing out on the top one trading day each year can really destroy your return. So this study shows you basically that this is the S&P 500 stock market return, a return of 8.2% per year, which basically means you're more than doubling your money every decade. And if you only miss out on the top 10 trading days across that 20-year window, your return goes down to 4.5%. And basically, if you miss out on the top 20 trading days during a 20-day period, so only 1 day a year, your return goes down to 2%. And beyond that, you start to basically lose money if you're out of the market. So the takeaway in this chart that I wanted to show you is that sometimes you think that we can fully control when we're gonna get back into the market. But sometimes all it takes is 1 day. And I remember around March in 2020, the market went down by 9% and then rebounded by 9 or up to 9 or 11%. So imagine in 1 day, this is a return that sometimes takes a year to make. So really be careful if you're trying to think that you're gonna time the market and enter later. It's really a loser strategy to think this way. And it's much, much easier for you to just stay the course and on the contrary, keep investing while these events unfold. So I think we got a question from Giving You Value around the KSA ETF name. Well, I wasn't referring to specifically a KSA ETF. I was giving you the name of an emerging market ETF, which is something you might want exposure to, given, for example, the tensions in the US. The ticker is called IEMG. And it's a BlackRock MSCI Emerging Markets ETF. But that being said, we'll publish some ETFs that are regionally focused, traded on the US stock market. Maybe that'll help you, Giving You Value. If you're a Sarwa client, we'll try to push that on our social media channels, as this is something that a few of you are asking us. All right. I think we got another question. Yabzi Doodle, nice name. Is it true that you will only feel the magic of compounding interest after 12 to 13 years? Very good question. Let's look at that one together. So you're asking how long does it take basically to see the benefit of compounding? And of course we do say the longer the better. I'm going to show you a calculator that helps you understand it. So this is on sarwa.co. And we have here a calculator where you can see, okay, if I want to invest basically, doesn't matter, let's put $80,000 in a growth portfolio and, whoops, sorry, just removing your hair. And I'm going to be putting $1,500, $1,300 every month. Well, in 5 years, so basically just to show you what this graph shows, this is the amount of years all the way to 30 years from now. And this is the Sarwa value. This is a savings account. So you're barely earning 1%, much lower actually in today's environment. And this is traditional investors that charge you a lot of fees. So we want to focus on this number here. Basically, this amount at the 5 year, it's around $200,000. Let's take your question, which is, what happens 10 years from now? 5 years all the way to 15 years. Sorry, we were here. So at the 15-year mark, we went from 200K to about 600K. Adding another 10 years, that 600K will become 1.5 million. And then this is where, notice the last 5 years, we go from 1.5 million in 5 years to 2.2 million. So you're right, the magic is, for me, happens here or maybe here, but this is like a quote I'm hearing a lot is it's gradual and then sudden, and then suddenly you'll see the benefit. So you're right, compound interest is basically your money making money, and this is why it's important to be very, ultimately you start making money, your money starts making more money than your salary, and this is really the goal of setting up a plan and being patient in the stock market. So it's very much a get-rich-slow mentality. We wish the returns were higher, but by being disciplined, your money will start making such a sizable investment, such a sizable income for you. But it's going to take, I would say, 5 to 10 years for you to really start seeing the benefit. Hassan, you're asking, why can't we buy gold and oil on Sarwa? So Hassan, you can on Sarwa Trade. You'll be able to buy ETFs or that focus on giving you exposure to gold or to oil. So this is a bit, if you want to do a bit of your research on what type of ETFs cover and give you exposure to these sectors, you will be able to do that via Sarwa Trade. We don't have gold or oil as part of our core portfolios. We have it as part of our Sharia compliant portfolio. We have a bit of gold because Sharia compliant portfolio don't allow you to invest in bonds or something more safer. So that's our way of making your portfolio less volatile. But if you want to get exposure to it, please feel free via Sarwa Trade. And again, we'll take that point to publish some of these ETFs we see our clients get into. Question from Omar, would you consider adding more portfolio options for Sarwa Invest? Potentially, yes. We're always looking at ways to innovate and improve our portfolios. Our most recent one, Omar, I'm not sure if you got exposure to that, but it's basically adding 5% in Bitcoin as an allocation through Grayscale or a GBTC. So this is something we rolled out around May, June last year. And you also have options to have a socially responsible portfolio that's performed, actually, it's our portfolio that performed really, really well in 2021, even more than our conventional. So there's a thesis basically that investing in companies that prioritize a better planet and better practices will outperform over the long term. So we're already starting to see that. We have, and we're in terms of, if you don't want to wait until there's a theme or there's a trend that you want to be exposed to, this is what Sarwa Trade is for, where you can fund your account and trade certain ETFs, certain stocks that you feel you would want to have exposure to in your portfolio. The way I approach it is having around 85% of my net worth in Sarwa Invest and diversified long-term passive investments. And in the remaining 15%, this is the area to have a bit more risk or back a theme that you really strongly believe in. Question from Julia. Are there any index funds to invest in? Yes, absolutely. Julia, you can basically go on our website. We'll ask you a few questions and to get to know you, your risk profile, and we recommend you a basket of ETFs or index funds that match your risk profile. You can take that recommendation, you can use it for your own, or you can sign up to our automated service where you add money and we allocate your money in accordance to your optimal design portfolio given your current situation. So we love investing in index funds as it's the best way to diversify. El Saadi, you said you started in Sarwa. What is my advice? Well, great job, first of all. The biggest part is getting started. So my advice to you is you started, but now it's important for you to continue investing, to see what type of income do I have, what's the percentage of my income can I put aside to invest in myself before I start paying other people, my bills, my needs. How much money as soon as I get my paycheck can I put? Is it 5%, 10%? Some people invest up to 50% of their income in the UAE. So my advice to you is really work out what is your number in terms of the maximum amount you can be putting in, because that's money you're putting in your future self before you pay out all the different people that are after your wallet. A few questions in the last 2 minutes. I'll do my best to get through all of them. Omar, you're asking if you offer internship programs at Sarwa. You love the idea and you've been invested for a while now. We don't currently have, but we're opening up internships soon. So if you go on jobs.lever.co/Sarwa, you'll see our opening positions, and we're hiring quite a few roles. So please monitor that page and apply as soon as you see an internship program. But thanks for staying in touch with our content. That's the best way to get to know the firm. Mani, you asked, when are you seeing the deposit fees for other GCC countries? This is a project we are working on at the moment. So I was actually in touch with that yesterday with the team to minimize your bank fees when funding your Sarwa account. Purist Vegan, love the name, asks if you can deposit only from UAE bank account. No, you can deposit from other banks. So if you go through the app and you click that green button in the middle, you can click international bank transfer, and we'll guide you through the steps to deposit from your bank outside of the UAE. That's not a problem at all. In fact, if you're wondering if this is an account you can keep after you leave the GCC or wherever, this is a global account. So you can use your Sarwa account from anywhere. Mayroom, you're asking if we have people that speak Arabic. We do actually. More than half of the company speaks Arabic. So please indicate your preference when you talk to us on chat, and we'll make sure we have a very diverse team of Arabic speaker from the region. So we can definitely help you out. So here you're asking, you live in the UK, can you still create an account with Sarwa? Yes, absolutely. It's a global platform. Yeah. Saad, you're asking if the stock is dropping due to the latest tension. Any sign it will rise? Of course, I hope maybe you joined a bit later, but I was showing you a lot of data on how the stock market rises over time, regardless of every single crash that came its way. So what I will ask of you is to be patient. We cannot predict when it will rise, but take advantage of this opportunity to see the stock market on sale. So keep buying into the stock market across the next few weeks, across the next few months, and you'll see that you would have bought on the cheap, so that by the time it rises, you'll see your return improve more than if you had waited. And another question is, do I have to change my address if I leave the UAE? Yes, absolutely. That is better. It's best if you notify us, so we always have the most accurate information for you, and we can give you the best service given if you're in the UAE or not, as sometimes there are some differences. We're a bit over time, but really appreciate the engagement this time. And if you have any questions, if you're concerned about the volatility, please reach out. This is what we're here for as your investment platform, as your advisors. So this is where we're the most engaged and here to help you in an uncertain time. So thank you for joining, and please spread the word to help those around you stay the course during these difficult times. Thank you.